The IMF has officially raised its forecast for global economic growth in 2025 to 3.2%, up from its earlier estimate of 2.8%. This upward revision comes amid signs of stabilization in trade, technology investment, and industrial production across major economies. However, the tone of the IMF report remains cautious. While growth is holding steady, deep structural risks continue to threaten global markets, including renewed tensions between the United States and China, rising inflation, and mounting debt crises in developing economies. The fund's latest World Economic Outlook highlights a complex global picture: optimism in short-term growth, but growing concern over long-term sustainability. The report points out that several factors have contributed to this temporary relief. Improving consumer demand in North America, stronger service sector performance in Europe, and a surprising rebound in manufacturing across East Asia. In the United States, the economy is projected to grow by 2.0% in 2025 and 2.1% in 2026. Analysts say this modest expansion is driven by strong employment and continued technological innovation in artificial intelligence, energy, and defense sectors. However, U.S. inflation remains a challenge, with energy prices and federal borrowing both pushing up costs. The IMF warns that America's high public debt, now exceeding $36 trillion, could limit fiscal flexibility in the coming years. Across the Pacific, China remains a central pillar of the global economy, projected to grow by 4.8% in 2025. Yet the IMF notes serious structural weaknesses in China's property sector, declining domestic confidence, and lower export demand due to Western supply chain diversification. The ongoing U.S.-China tariff dispute continues to cast a long shadow over world trade. Despite recent negotiations, both sides remain locked in disagreements over technology, manufacturing subsidies, and maritime control. Trade analysts caution that even benign tariffs can slow global recovery by disrupting supply chains and increasing consumer prices worldwide. Meanwhile, the European Union is showing a mild recovery. Germany, France, and Italy are reporting slight growth following heavy industrial slowdowns in 2024. But high energy prices and weak productivity still constrain Europe's overall outlook. The IMF's data shows that emerging markets, particularly India, Brazil, and Indonesia, are helping balance global performance. India, for example, is projected to grow by 6.3%, making it one of the fastest-growing large economies on the planet. However, the report emphasizes that these economies remain vulnerable to external shocks such as currency volatility, oil price hikes, and rising global interest rates. Oil-producing nations in the Middle East have seen strong revenue this year, but many remain cautious as global demand is expected to slow in late 2025. Saudi Arabia, for instance, continues its diversification plan under Vision 2030, focusing on technology and tourism. In Africa, countries such as Nigeria, Kenya, and South Africa are battling inflation and debt burdens, though new investments in renewable energy and agriculture bring some hope. The IMF also raises alarms about climate-related disruptions that threaten food security and migration stability worldwide. Floods, droughts, and severe weather events are now costing developing nations billions annually. At the same time, global inequality continues to widen. While developed economies recover, many low-income nations still struggle to regain pre-pandemic GDP levels. In its conclusion, the IMF urges governments to adopt fiscal responsibility, debt transparency, and investment in sustainable infrastructure. It also highlights the importance of maintaining open trade channels, innovation funding, and climate adaptation programs. Financial markets reacted cautiously to the report. Global equities rose slightly, but bond yields remained high, a sign that investors are still wary of inflation and central bank tightening. The US dollar strengthened slightly against the euro and yen, while commodity markets showed mixed signals. Gold prices rose modestly, reflecting investor appetite for safety assets. Experts say this IMF report comes at a critical time when political tensions, wars, and trade rivalries are reshaping global economic order. Former IMF economist Laura Mendoza stated that, "The global economy is not collapsing, but it's walking on a tightrope." She warned that one wrong policy move could trigger cascading effects across multiple regions. In Washington, the White House welcomed the IMF's upgraded forecast, calling it proof of resilient American leadership. However, critics argue that the optimism hides deeper vulnerabilities, including inequality and infrastructure gaps. In Beijing, Chinese state media responded cautiously, saying that the IMF's growth expectations were realistic but conservative. Officials added that China remains focused on boosting domestic consumption and stabilizing its housing market. Meanwhile, European Central Bank officials in Frankfurt said they would continue gradual rate adjustments while monitoring inflation. The IMF's managing director, Kristalina Georgieva, concluded her press conference with a message of global unity, saying, "The world has weathered crisis after crisis. Our challenge now is not survival, but sustainable recovery." Her words underline the fragile optimism that defines the global economy today. The question remains, can the world sustain this fragile growth, or are we heading toward another financial shock? Only time, and coordinated leadership, will tell. Stay tuned to World Pulse News for continuous updates, in-depth analysis, and breaking reports from every corner of the world. We bring you the truth behind the numbers, the politics behind the headlines, and the future behind today's economy. This is World Pulse News, where the world connects through facts. Good night, and stay informed.